In Chapter 1, we used the horizontal model. In Chapter 2, we posted our transactions to T accounts. In Chapter 3, we start doing journal entries. Let's go back to our SoftBite example. In Transaction 1, we had an investment by owners. When we do journal entries, we always start with the account that is debited. If we look in the general journal, we put in the date, September 1st. Ray and Barbara invested $15,000 in cash. Therefore, the first entry we make is a debit to cash. We come over here in the debit column and put the $15,000. We then list the account that gets credited. In this example, it's owner capital. And then we put the amount, $15,000, in the credit column. Our final line is a description, initial investment of cash by owner. When we do journal entries, our debits always equal our credits. In the second journal entry, we buy computer equipment for cash. Our entry is done on September 2nd. We debit computer equipment for $7,000. Computer equipment is an asset. To increase an asset, we do a debit. We paid for our computer equipment with cash. Therefore, our cash decreases. To decrease cash, we do a credit. Finally, we put in a description, purchase of equipment from OfficeMax. In our third transaction, we buy supplies and we promise to pay for them later. First thing we do is put in the date, September 3rd. The supplies account has increased. Therefore, we debit supplies for $1,600. We promise to pay for the supplies later. Therefore, we credit accounts payable. Accounts payable is a liability. It increases with a credit. Our description is simple, a purchase of supplies on account from Acme. Transaction 4. We provide services to customers for cash. Our date is September 4th. The company received cash. Cash increases with a debit of $1,200. Why did we get the cash? For performing a service. Service revenue increases. To increase the revenue, we do a credit. Our description is cash received for services rendered. In Transaction 5, we receive a bill and we promise to pay it later. We put in our date of September 5th. Our expenses have increased. To increase an expense, we debit the advertising expense for $250. We promise to pay for it later. That will increase our liabilities, so we credit accounts payable for $250. Our description is to receive the bill from the Daily News. Transaction 6 is a compound journal entry. We provide $3,500 of services for cash, and our customers promise to pay us later. When the company receives cash, cash increases. To increase cash, we do a debit of $1,500. A customer promises to pay later. This will increase accounts receivable, so we debit accounts receivable for $2,000. We provided a service. Service revenue increases. To increase the revenue account, we credited $3,500. Our description, perform services for cash and on account. In Transaction 7, it is also a compound journal entry. We pay for store rent, salaries and wages, and utilities. Each of these items is an expense. To increase an expense, we debit the account. Therefore, we debit rent expense for $600, salaries expense for $900. Utilities expense for $200. We paid these bills with cash. Cash decreases. To decrease cash, we do a credit of $1,700. Our description is that we paid the monthly bills. In transaction 8, we pay a vendor who we had promised to pay later. Therefore, we debit accounts payable for $250. The liability account is decreasing. We decrease a liability with a debit. We paid the bill with cash. Cash is decreasing. To decrease cash, we do a credit. In transaction 9, we receive cash from a customer who's already been billed. When the company receives cash, cash increases. To increase cash, we do a debit. The customer who promised to pay us did. Therefore, the accounts receivable is decreasing. To decrease accounts receivable, we do a credit. Our description: received cash from customers on account. In our final transaction, the owner withdraws cash. When an owner takes money out of the business, we need to debit the withdrawal account. We debit this owner withdrawal for $1,300. The cash account is decreasing. To decrease cash, we do a credit. Our description is a personal withdrawal of cash. If we look at our journal entries all together, we will see that every time we do a debit, we make a corresponding credit. So if we go through and we make sure that all of our debits are equal to our credits.